Hi everyone, this is your Govindraj. Thank you very much for watching my videos. In this video, let me tell you when and how your EPF contributions and interest you earn will become taxable in your hands. Especially in three situations, your EPF contributions and interest will become taxable, and the EPFO will deduct the tax on your EPF contributions and interest. First situation is when you withdraw your EPF before completion of 5 years, then you get taxed, and that contributions are liable for tax. That is one reason. The second one is if employee contribution crosses more than 2.5 lakhs. This is from the financial year 21 and 22. If your EPF contributions crosses, employee contributions crosses more than 2.5 lakhs, on more than 2.5 lakhs, whatever you contribute, on that you earn certain interest. So that interest will become taxable in your hands. The interest up to 2.5 lakhs contributions, there are no tax, but the interest on contributions over and above 2.5 lakhs will be taxable in your hands, and that is from the year 21 and 22 onwards. In this regard, I have already made 2-3 videos. I would request you to watch. Now this is the second scenario. The third scenario is if your employer contributions crosses more than 7.5 lakhs in a year, so then the contributions over and above 7.5 lakhs and interest you earn on those contributions are also taxable in your hands. This also I specifically talked about in a video. For details you have to watch this video. But in this video, let me tell you an update. Recently, the EPFO department has updated the interest for 2021 and 22. And in the previous video, I also talked about if you are contributing more than 2.5 lakhs, then the EPFO will make your contribution register or card as taxable account and non-taxable account. So let's take one case where how your passbook will look after segregating your taxable account and non-taxable account. So I am taking a case where in 2021 and 22 onwards, there are two accounts will reflect for employee contributions. So this is the employee share. If you look at this is the employee contributions which someone has contributed, and this employee contribution has been segregated to non-taxable and taxable. So you will find there are two accounts. Then up to 2.5 lakhs of your contribution will be placed in non-taxable account, and the moment it crosses more than 2.5 lakhs, then it is segregated into taxable account. So therefore they will try to manage, or they will maintain the cumulative balance in both taxable and non-taxable account. So when they credit the interest for you, see this case the interest is updated up to 31/3/2022. So then what they are going to do, whatever the interest which they earn or which you earn on the taxable account, they will deduct the tax. You can see 851 rupees the tax is deducted on the interest which you earn on taxable account contributions, and the rest gets deposited here. And of course, if the interest earned, taxable interest is less than 5,000, then the TDS will not be deducted. So there, however, in this passbook you will not know how your interest in both taxable and non-taxable is being calculated. So therefore, let's take in an Excel sheet and also try to arrive at this tax on your EPF contributions, both taxable and non-taxable account. See, if you look at, I have taken the same example. In this case, the opening contributions are 28,97,775, and the employee has contributed this much contributions. Now the interest, which is actually 2,57,987, is credited. You can also see here 2,57,987 is credited. How this has been arrived on, how the TDS has been deducted, let's try to understand this. Now this is the opening balance. Now the non-taxable account is up to here, the 2.5 lakhs. The moment the contribution has crossed 2.5 lakhs, the rest has been shifted to taxable account. See, up to July 2022, your contribution was 2,28,920. Then in August you contributed 45,784, and whatever is sufficient to fill up to 2.5 lakhs, then it is added to non-taxable account, and then the rest has been shifted to taxable account. So therefore the next contributions on cumulative basis are being added to your taxable account, whereas non-taxable account, your cumulative balance is continued as 2.5 lakhs. Now, how the interest has been calculated, this is very important. So, of course, your opening balance was 2,28,97,775. For 2021 and 22, the interest rate declared was 8.1%. So, therefore, the interest is straight away calculated here, which is arrived at 2,34,719. So, this is straight because the balance is already there. But the contributions which you make on every month, the interest calculation is not so very simple. See, if you look at this here, you have made a contribution of 45,784, whereas you don't earn this interest. The EPFO department actually calculates the interest on your running balance, and the first month of the contributions you don't get any interest. The first month contributions will yield interest in the next month. For example, if you look at this cell, you contributed 45,784 in March, then you don't earn the interest in the same month, whereas 8.1% interest on a running balance divided by 12 is added in this in the month of April. So this means in the month of April you can earn interest for the contributions in the month of March. So that too, since it is on a running balance, they will straight away calculate on your contributions the interest at 8.1%, and if you divide it by 12, you will get a running interest for that month. So this is how it has been calculated. The same way this is continued. For example, for the month of May, the interest which is given is for the contributions of April month. So therefore, if you can see here, the May interest is added for the contributions of April. So in the same way, you are going to calculate your interest. And also in the taxable account also the situation is similar. You have a taxable account in the month of August, you don't earn the interest for the same month, but you earn the interest for that amount in the next month, which is in October. So you calculate the interest on September balance into 8.1% divided by 12 will give you the interest for that month on a running balance. Same way, if you calculate, your interest will become this much, which is basically 2,57,987, the same interest which they have shown here in the passbook. So this is how you calculate interest. Now how do they deduct the tax? Now I have calculated the interest for both taxable and non-taxable account. So if you look at your taxable interest which you earned in 2021 and 22 is 8,507 rupees. On that, the EPFO is deducted 10% tax. Also, that becomes 850 rupees. The same 850 rupees is shown as minus, then the balance is arrived at here. So therefore, after minusing your TDS, they will credit the rest to your interest account. So that is how you will arrive at the balance. So this is one. And how much percentage of TDS they will deduct is basically depends on whether your PAN is seeded or not. If your PAN is not seeded, it could be 20% also, it could be 30% also. So therefore you can understand by this. Thank you very much friends for watching this video, and I will come back to you with this more information, and see you soon friends.